Cost plus pricing is one of the oldest methods used in business to price products and also services. In this week's I Hate Numbers video, I'm going to explain to you what cost plus pricing is, how it applies and how you use that with some numbers thrown in, its plus points as well as its drawbacks, of which there are a few to share with you. Hi folks, welcome to another weekly episode on I Hate Numbers. My name is Mahmood. I'm an accountant by profession and also a business finance coach. And over the last 27 plus years, I've helped thousands of businesses make more money, and by money I mean profits, increase their financial understanding and awareness, help them win more battles than they lose for what goes on between their ears, and help them save time, save tax, and have the businesses they aspire to. That's a pretty good combo, if I do say so myself. Let's crack on with this week's video on cost plus pricing. First of all, what is cost plus pricing? As the name implies, you take a cost for your product or your service as it's evolved into, and then you add something called a markup. So for example, if I made a product, let's say for example, I made these wonderful glasses here. I would work out what the cost of the product of manufacture would be. Let's say for argument's sake, it's cost me $10. I would then think about a markup, a profit element to add to that cost. Let's assume I wanted my markup to be 100%. So the cost is being 10. I add another $10 to that, and that means my selling price to my customer is $20. Now, if I'm registered for VAT or sales taxes, as it might be outside of the UK, I would then add the appropriate rate of VAT. In this case, let's assume it's 20%. So that's $20 for the price to the customer, add the 20% on behalf of Her Majesty's Revenue and Customs, and that gives you $24 is the price you charge your customer. Now that's the methodology. How does that work actually in practice, and what are some of its conundrums? Now, first of all, let's think about this idea of cost. Now, the cost involved in me making these glasses, let me fetch those glasses once more, will be the cost of the raw materials that have gone in there, the cost of my team that have actually assembled and manufactured that product. That's called my direct cost. Now that is £10, but I also need to incorporate the other overheads that have been incurred. So the cost of running the machinery, the cost of renting my factory space, the cost of effectively the repairs on the machinery and everything else that goes with that. And therefore, that cost, you've got to decide, is it just the cost of providing and producing that product in the materials and the labor costs? Make sure you add on the cost of the overhead as well. And that gives you what's called the full cost of production. So the decision you've got to make, first of all, is what do you mean by that term cost? What does it include? Now, having decided what that cost will include, we then think about the level of markup that we want to apply to that. Now, let's think about some of its drawbacks as well as some of its plus points. Now, one of its key advantages is that it's simple. Most business owners should do, and if you're not in the should do gang, you need to join that pretty quickly, have an understanding what it costs to produce your product or provide a service. Once you know that and you've got an idea of what that markup should be, you can just apply it uniformly. It becomes easy, and easy is always a great advantage in business. It's simple and straightforward to apply, and you can apply that to different products that you're manufacturing or providing. If you're a retailer, the cost of buying in your product from the wholesaler, you can add a markup to that, and it becomes a relatively standardized process. You know that you're going to be recouping your costs if you sell that product at the price you want it to. Now that's its advantage. It's simple, it's straightforward. Most people are familiar with that. However, there are drawbacks to this method as well. Let me explain what some of the drawbacks to cost plus pricing will be. Number one, customers don't really care what it costs you to produce something or what it costs you to provide that product to them or that service. All they're interested in is, does it have its utility? Does it do what it says it should do? Does it give them some form of problem solving, transformation? And what's the value of that particular commodity, that particular service? The costs are your inherent problem, not theirs. So actually applying a uniform markup could mean two things. Number one, you become very uneconomic in the eyes of the customer. Secondly, there is no incentive for you to challenge your costs. There is no incentive for you to see if those costs can be reduced down accordingly. What happens is you could build up inefficiencies in there. You have no recognition or connection with what those costs are, and therefore that could make you very unmarketable, very uncompetitive, and that's not what we want for your business. Now, another problem to take into account is that if you've got a variety of different products here, applying a uniform markup across the board, or even if you do it by groups here, again, doesn't give you any insight here as to whether that price, that profit margin, is actually a good one. Now, markup is a straightforward thing to do. However, though, it can lead to some inefficiencies as well. Now, I mentioned earlier on, folks, about the heavy lifting. If you're thinking, I've got a variety of products here, I might want to play around here, there's a wonderful online tool, a calculator that I can share with you. Please check out the link that's provided to you. And you'll see from that calculator, you just need to key in the cost of your products. You need to decide a markup, press a couple of buttons, and hey presto, you can see the price you should be charging to your customer as a result. You can use that to work backwards. It's a very powerful online tool. So don't let the mathematics put you off. Now, cost plus pricing, again, it's a tool, it's a pricing methodology in your armory. It's got a long history behind it. It's very useful, very practical, but it does have some inefficiencies built into it. So be careful, different pricing tools for different situations perhaps, but this is specifically on cost plus pricing. Hope you found it useful, and if you have found it useful, I'd love to hear your feedback, love to hear your comments. Share them in the comments box as well. If there's something you'd like me to talk about in future episodes, then I'd love to hear your thoughts as well. If you think that somebody's going to benefit, then obviously recommend the video to them, subscribe, and until next week, folks, happy cost plus pricing.